Hi, this is Pat Moorhead, and we're here for another episode of Fintech and Retail Tech Friday. I am Patrick Moorhead. Is that the second time I said that? But more importantly, I have Melody Brew here, Vice President and Principal Analyst for Retail Tech and Fintech. Melody, how are you?
Doing great. I'm so glad it's Friday. And I was just noticing, I think it looks like I'm wearing like I don't know, what is this, like a pilgrim suit or
I don't
something?
know. I don't know. I mean, it was very popular in the 70s too with rock stars. So, you know,
It's actually a cute dress, but just wanted to get that out of the way. And
no, I appreciate that. I wasn't even thinking like Rolling Stone or Led Zeppelin or something like that, but they all, but you would have to button it all the way to the top.
yeah, just get really,
Yeah, and then have frills on your right, the ends of your shirt. But listen, it is important. Obviously, I don't care too much about fashion, but one of us has to show up and look good. But if this is the first time tuning in, we're just talking about what's happening about every 2 weeks out in fintech and retail tech. And we might talk a little bit about the news to get context, but this is all about industry analyst positions on it, what our opinions are. So with that, Mel, let's dive, or actually, let's talk about what we're going to talk today. I mean, we're talking about metaverse in real life. What? Don't you always freak me out on these things? Investment platforms, subscriptions, crypto mortgages, and the acronym. And of course, the rant of the day, of the week, stamp. I have no idea what this is, but this is why Mel runs this and I don't. So let's just jump right in. Mel, wait a second. The metaverse, by definition, is not in real life. So,
yes.
what weird ninja Jedi games are you playing here?
Yeah, so Meta is opening up a store to have like all of these metaverse, all the headsets and all the things that will enable people to participate in the metaverse and be able to actually go into the store and experience it in real life. So it opens, I think, May 9th. When you think about the the metaverse, like my kids all have the Oculus and they play with that, but for a lot of people, it's like this esoteric thought of, this different universe. And I'm not going to do that. But the truth is, you don't have to actually wear this device on your head. There can be overlays on your smartphone. There's all different ways that people can interact with the metaverse. And it's not just virtual goods, like there's been all this talk about virtual real estate and virtual branding or brands making virtual merchandise and all of this. But there is, with all of this overlay technology, it will be, on these VR headsets and everything. But there are lots of ways where brands and retailers can interact in the metaverse and bring that experience back to the brick and mortar stores. Like, reminding people that, like, General Mills is doing a whole program where they have calendars, and if you enter in that your kid has a soccer game, they have access to your calendar and your kid has a soccer game, they will remind you that, maybe it's your turn for snacks. And you can kind of take your metaverse experience and this overlay and take it out into the real world. So, when you look at like the whole concept of the metaverse and pulling people out of the real world, there's actually a place where they intersect. And there was a study done that said, like, people feel like they can behave more like themselves in the metaverse. That's why a lot of like these gamers, they feel more comfortable. They feel like they can be more of themselves. They can voice themselves and they can express themselves more freely. So kind of taking same freedom and that concept into the real world, I think, is sort of where we're getting here. Is like it's not just existing on a VR headset. It's actually going to be able to have some sort of
What kind of
interaction in the real world. And
what
what
kind of
Meta's doing here is showing the ways in which you can do that and come into a brick and mortar store and experience that, so that it isn't such a strange concept for people.
Yeah, I think the experience is everything, and I can't say that I've used every single brand of metaverse headset, but I've used most of them,
Mhm.
and I think as the experience gets better and people get less scared of what they they might see as kind of, something for the freaks and the geeks,
Mm-hmm.
then I think they could start to do some business. I do find it fascinating that this just whole oxymoron of a metaverse store. But I mean, the reality is you have to go somewhere, right? And my guess is this was probably something that they had envisioned at first with maybe doing with a big box retailer like a Dixon's or a Best Buy or a Fnac out there, and they probably just didn't see what they liked. They may also have seen what Apple did and had success with. Less
Yeah.
successful for other companies like Sony and Microsoft, who ended up shutting down their branded stores. But I do give
Yeah.
them a lot of credit for trying.
Yeah. I mean, really, it does give you an opportunity to experience it. And also maybe those who might be sort of intimidated by it and think it's just for gamers, those types of, that this takes away that and gives people a chance to actually, go in and like look around and see what it is. I mean, for retailers, it opens up a lot of different opportunities. If, when you talk about like the layovers on just a mobile device, they can now do like full 3D catalogs where it's not just click on something and see the front and the back. It's like you can actually really experience a product. So this gives people the opportunity to check it out in real life, IRL. That's what the kids say, IRL.
I know. Probably every month I have to look that up. I'm going to admit, I mean, it's terrible. Like, how? I mean, I think I'm turning old. Pinch me, shoot me. I don't know, something.
Yeah, we all get there.
Yeah. So let's jump into a yet another way to consume Robinhood, Coinbase, and Revolut, right? I mean, leave it to these new fintech platforms to just come up with another way to buy.
Yep, another way to buy. This is so this protocol wrote this article, and they actually called me and asked me for my opinion on this. And when I look at it, I think, with these $5 subscriptions, Robinhood's $5, Coinbase is kind of fee-based. Revolut has different various subscription models. That's not really going to be the big revenue driver, but it's also sort of a why not? Because the millennial kind of the generations that they're targeting are so used to subscriptions.
Yeah.
They have subscriptions to Netflix, they have one to DoorDash, they have one to Instacart, everyone has a subscription now because it will help you save money or you get premium features or whatever it is. So it's really an add-on that is going to probably provide a little bit of revenue for them, but I don't think that that's the main driver. I think the main driver here is it attracts actually, let's move back a little. For a novice investor, it gives them a little bit more education and tools that may entice them to trade a little bit more. It may, move them up a notch on their trading volume. And it may actually, with those kind of premium features, it may attract also a more sophisticated investor. So they're kind of doing a number of things here, I think. And so we're seeing that, on like the fintech, the apps and everything. So Schwab jumped on board. So Schwab has this intelligent portfolio, which was free. It's a robo advisor. They now have Intelligent Portfolio Premium, and they charge, it used to be like a 0.28% of assets under management. They're now doing a subscription. So they charge $300 for a setup plus a $30 monthly fee. So that doesn't sound like it's a lot, but when you think about how much money you have in your account, that changes that percentage of your assets under management. So at $25,000, you're actually paying 1.44%. That's more than you would pay an actual advisor.
Interesting.
So
Interesting.
I'm kind of calling them out on that. Obviously, the more money you have, the less that the lower that percentage goes. That goes entirely against what we're all trying to do, which is democratize finance, right? So they're saying, if you're rich, we're going to charge you less. If you have less money, we're going to charge you more, and that's not good. I'm not on board with this model.
Yeah, it's almost like taking advantage of people who don't have history on how these things came to be.
Right.
Because if you remember, the meme in .com 1.0 was get rid of your broker, right?
Mhm.
And pay $7 a trade on
Right.
E-Trade. And then it was, hey, we're Schwab, $0 trades for certain types of trades. And now we've gone full circle to kind of and it gives you the thought and the notion that you're paying less and getting more when it
Mhm.
sounds like you really aren't.
Yeah. Yeah, I mean, you're paying more if you have less, is what's happening. I mean, not necessarily like with Robinhood and some of these others, but I mean, if you do the math with Schwab, that's clearly what it is. But with Robinhood, you're getting just some premium features. I think that $5 is sort of it's more of a psychological thing. When people pay for something, even if it is just this nominal fee, they feel more of a sense of belonging, of community, and they're more likely to use it. So that's probably more of a strategy around that. They also, when you have somebody sign up for something, you get all kinds of data around them. And the more they use it, the more they interact, the more data they have on that customer, the more they have, to offer them additional services. If, as they go into super app mode, as we've talked about many times, if they need to offer insurance, if they start to offer other services, they have more data on these people because there's more of a community being built around it. So I think what they're getting out of this is the increase in trading, the community, the volume, and then the data that surrounds it. I don't think it's really an amount, the fee that they're charging. And I really do think that it could potentially attract a more sophisticated investor to an app-like platform where they'd probably be like, well, all I can do is trade a stock here and there or buy a stock here and there. I can't do really any like actual sophisticated investments.
Let me ask you this: what's wrong with this whole idea, this notion of maybe capitalism, which is, you give me more money, and I've modeled that if you give me more money, I'm going to make more money. Therefore, I'm going to charge you less to get you in to make more money off you, versus somebody who doesn't have a lot of money. And on one hand, it does go against the democratization of investing, but in the other way, it's like that's kind of business. It's like, the difference between, I don't know, selling somebody, I don't know, what am I trying to say here? A BMW, 8 Series versus a 4 Series, giving you a better experience if you bought the 8 Series versus something different.
Yeah, I mean, I think that part definitely makes sense, and people are willing to pay for premium features. I think the part that goes against the democratization of finance is that if you have less money in your account, you're charged more on a percentage basis.
Yeah.
Right. So everybody's charged $30 no matter how much they have in their account. But if you actually do the math, which I think they're probably counting on people to not do the math,
Yeah.
that at a percentage that doesn't really equal out to be as cheap as it sounds. You think
Yes.
it's just $1 a day. Well, but it's actually like it's a percentage of your overall wealth that you're paying for. And then it goes down, exponentially as you have more money in that account. So,
There,
but
there
yeah,
we
I think
go.
people definitely are willing to pay for premium services, and they're getting them,
Yeah. Yeah. By the way, I can totally see both sides here. I don't think it's democratizing anything, but I do think it's kind of like companies trying to make, more money and attract people with more money. So we'll
yeah.
see. Hey, let's get into something that looks like risky AF, which is crypto-backed mortgages.
So I knew this was going to be one that
Is
you're
this
going to
for
say like,
real?
what?
Well,
Yeah.
listen, I told you I had a little Coinbase experience. I think I put 20 grand in. I think I immediately lost five like a day, right? And then, did some bracketing in here to find the right one. Kind of got back to where I was, and then I converted it all into cash. I chickened out. I'm like, I'm done. I think I
Yeah.
learned my lesson. There's no intelligence in this game. except if it's long term. But hey, let's put the down payment to buy houses. Sounds like a great idea.
Yep. So this company, so that you know the term crypto rich, right? Like there's a lot of people out there who have a lot of wealth, but it's all tied up in crypto. And when they go to buy a house, their choice is either to cash out of their crypto, which most of these people who have the crypto, the reason why they have it is that they're sort of the long-term believers that it's going to go up to $1 million of Bitcoin or whatever that target is. So this company, Milo, I'm not sure how you pronounce it, has come up with a way for crypto holders to basically keep their crypto, put it into kind of a like escrow situation as collateral, and use that as a down payment on a home. Then they then give them the mortgage, same, around the same price as you can get a mortgage from, anyone, Quicken Loans, or who I have my mortgage through. And that crypto sits in that account. So really, if you think about it, if you've got crypto holdings and you want to invest in real estate, you're going to actually see the gains on both, because you still own that crypto. You're not paying for the house in crypto. You're just collateralizing the house or the condo or whatever it is. This is happening a lot in Miami, so I'm assuming they're condos. I was actually going to call this crypto for condos.
Ooh, so smart. I like that. So good.
But when you think about this, so then I'm assuming that Milo then just sells the mortgage, so that's how they make their money. They're taking a lot of risk, which my guess is that they've got to have some sort of insurance bond on that. But they do mitigate that a bit by the ratio of crypto. The value of crypto goes below the value of the home. They allow, or they ask for more crypto to be deposited into the account to have that buffer for the volatility of the price of crypto. But you're not actually giving up that crypto. You still own it. So if you're in the market, say let's use Austin, for example. If I have a bunch of crypto, but I want to buy a house, and
good luck.
The value of a home went up 73% last year in Austin, or at least in my neighborhood it did. So if my crypto went up 30% and my home went up 70%, I didn't give up that 30% gain to buy my home.
Yeah.
I keep both. So it's a pretty attractive offering if you think about it. I'm just not sure how they can sustain it if there's really any major dip in crypto without them raising a ton of money to back it.
Wow.
Unless mortgage rates just go through the roof, and then, or they charge a premium on that, and that's how they make their money. But I think it's a really clever idea. And I do know a lot of people who've made a lot of money in crypto, but they just want to keep it. They want to hold it there because of HODL.
HODL. Let's HODL. All right. No, this is great. Like, I'm thinking of Austin now. Like, let's put 3 risky things in one bucket, and that's going to make everything great, right? Austin real estate, crypto, and mortgage rates.
Yeah.
Woohoo! Let's do a 1-year ARM too on that thing, just so we can roll the freaking dice, right? Even further. Let's get some more risk. It's funny. I'm an entrepreneur, but I take calculated risks, right? The ones that I'm comfortable with. And this definitely gives me a danger, Will Robinson, but I totally understand a crypto millionaire. And it's like, well, I have 100 million and maybe tomorrow it's 50, but I could still, I don't want to get out of it. Why can't I use this for some sort of a loan of some sort?
Mm-hmm.
I get it. Hey, let's move to the final topic here. And that's our acronym of the week, STAMP. Gosh, S. The only thing I could even guess on is that S is for securities. That's it.
It is, and I'm going to warn you. This is the acronym of the week, and it's also my rant because
I love it.
This is tortured me for the last week. Stamp is Security Transfer Agent Medallion Program. So if you own securities, or if you are left securities, like in a will or in the event of a death, or if you want to donate some of your securities, like if you want to gift them to a nonprofit, any number of ways in which you want to transfer securities to somebody, the transfer agent requires this particular stamp. So think of it like a notary on like steroids you can't imagine. And then think of that notary as nearly impossible to get. So
Yeah.
it used to be that you could just go to your bank, any financial institution, credit union, whatever, and they would give you this medallion. They no longer do. Actually, if you Google the getting a medallion, most of what comes up is, why is it so hard to get a medallion? Why does this thing exist? It's insanity. So I had to do this past week. I run an investment syndicate. I have 36 investors. I have securities that I need to transfer to them. And so I had to go about this process of getting a medallion stamp. I thought, I bank at Wells Fargo. I have accounts at Charles Schwab. I'm going to go to one of them. Well, Wells Fargo discontinued their program several years ago. It's just too cumbersome. Schwab only has it in 2 branches in the country. So even if they were to do it, and they won't, and I'll tell you why, but they won't do it. And even if they would do it, I couldn't get it done in Austin. So I'm just like pulling my hair out. And so I'm, Googling the heck out of this. And I finally came across, so that's the rant part. This is I found a Fintech solution. So Fintech to the rescue. I found a company called eSignatureGuarantee.com. And it is rare that I find a company that I'm like, thank God for you.
Yes.
Like,
Yes.
they saved me. I mean, and I'm going to show you. I actually have these are, it's called a stock power. I crossed out all the information. I don't even know if you can actually see this. I'm going to just flash it up like this. This little box right here, this little box right here is where the stamp has to go. That stamp has to actually be physically stamped, and it has to be physically delivered to the transfer agent with this green ink. So it's a special ink, and it has to have it with a barcode, and it goes under this special reader that shows the barcode and identifies the ink. So this is a really complex whole thing. So esignature.com, this was started by a guy who used to be a securities lawyer and saw the frustration that people were having when, they inherited some stock that grandpa had been holding on to for a long time, and they had the right to have this stock. They inherited it or whatever, but they couldn't because they didn't have, an account at Merrill Lynch with millions of dollars in it. They weren't able to get this medallion stamp. So what they do is they do it online, and they go through this whole KYC process. So for me, I run the syndicate through an LLC. So I went through the confirming my identity, that was the first KYC process. So I confirm who I say I am. So that's just, an integrated API authentication where I have to give my driver's license, prove who I am. And then they do a bunch of questions. I'm sure you've been through this where they say, which one of these streets haven't you lived on? Because they ping all these other resources and all that. And then I had to go through the same process with the LLC, which involves, uploading all of these documents. So they go through, the same kind of security and authentication and compliance that any sort of bank would do without you having to go into a branch that's not going to have the stamp anyway, because the stamp actually has to then be in the case there. I could not find one in Austin, and I'm very resourceful, and I could not find one in Austin. So they do all of this online. They do accept e-signatures, so I could sign my documents online, but they actually have to physically mail it to the transfer agent. So this company really just saved me this week. And I think, this is just the way things are going. Fintech solutions to banking issues. I think
Cool.
it
I
was,
love it.
they were super great. And the other reason why I really wanted to talk about this is because, again, if you Google it, it is, why is it so hard? I want people to know about them because
Yeah,
they will solve your problems.
that's nice. You're the type of customer that everybody needs, and we got to move along here. This is
Yeah.
a great thing. So, final thing we talk about is what's coming up. Work never ends, and we're interested in what's on your radar.
I've got two really exciting things coming up. So I'm just really excited about the Envestnet Advisor Summit that's in Charlotte, North Carolina. I'm going in person for that.
Nice.
Um, Always good to be able to actually see people in person. They've got some really great speakers. Keynote by Peter Diamandis, the X Prize guy. You know who he is. I've actually met him and seen him speak before. Just really awesome dude. And then the other thing is Finovate Spring. This is the first time they've been in person in 2 years. It's in San Francisco. I unfortunately have to be at a memorial service in DC at the time, but I'm going to be attending virtually. And they very generously gave me a 20% discount on registration to share with all of our fintech friends.
Wow.
So I will be posting that link on Twitter and LinkedIn and everything, so that anybody who wants to attend either virtually or in person can attend. They've got some really cool demos and lineups and things. And so I'm excited about both of those things. And I'm really excited about the weekend now. I'm
That's
just,
great, and I totally didn't go to the next Chiron. So there it is, Finovate Spring, 20% off, more insights, strategy discount in the show notes. If you're listening on audio, crawl over to our YouTube or Twitter page, and it'll be over there.
yeah, I'll put it on Twitter and on LinkedIn.
Yeah, great show. Mel, have a great weekend.
Thank
I've had
you.
a
You
rough
too.
week. Looks like, yeah, I heard you had a rough week. So let's take this weekend to recharge, and I'm going to try not to do too much work.
Yep. To your mouth to God's ears.
Oh, I hear you. So, hey, I want to thank everybody for tuning in this week. You know where to find us. Give us good comments, bad comments, what you want to see in the next FinTech and Retail Tech Friday with Melody Brew. Have a great weekend and take care.